Is a recession on the horizon? The signs are there, but so is the opportunity to prepare wisely. In this video, we're breaking down what's really happening and how you can protect your money without panicking. The headlines in 2025 have been nothing reassuring. Sometimes the news can be exaggerating, but lately the state of the economy has been in line with the doom and gloom. As a solo investor, navigating such environments can be difficult, but facts are an essential part of a good investor. We can be honest that 2025 has been running a little wild, and the first 3 months seem to be setting a very unpredictable ecosystem. Now, no one can predict the future perfectly, but in early 2025, there are several classic warning signs economists are watching closely. The yield curve has inverted, meaning short-term interest rates are higher than long-term ones. Historically, that's a red flag. GDP growth is slowing. Unemployment claims are starting to tick up in some industries, and consumer confidence, how people feel about the economy, is dipping. Inflation remains stubbornly high. Job growth has slowed, and global conflicts continue to impact trade and markets. All of this adds up to one big caution sign. A recession may be looming. Let's start with the basics. What is a recession? A recession is a period of economic decline, when the economy shrinks for at least 2 consecutive quarters. That usually means businesses slow down, people lose jobs, and consumer spending drops. It's a normal part of the economic cycle. After periods of growth, economies naturally cool down. But when the slowdown is severe or widespread, it becomes a recession. Recessions can happen for many reasons. Rising interest rates, inflation, as we have mentioned in the previous videos, supply chain disruptions or global crises. Sometimes it's even caused by people tightening their wallets because they think a recession is coming, which ironically can help bring one on. The economy is a web. When one part slows down, the impact ripples through everything else. Jobs, markets, even your daily expenses. Here is a quick history of the U.S. recessions, 1929 to 2020. The Great Depression began in 1929 after the stock market crashed. It lasted over 43 months, making it the longest and most severe recession in U.S. history. Unemployment hit 25%, and the economy shrank by nearly a third. In 1945, the economy shrank again as the U.S. transitioned out of wartime production. It was a short recession, lasting just 8 months, but marked the end of the World War II boom. Fast forward to the 70s. An oil embargo and runaway inflation triggered the 1973 to 75 recession, which lasted 16 months. It introduced a new economic challenge: stagflation, rising prices and rising unemployment. The 1980s brought not one but 2 back-to-back recessions. The Fed raised interest rates to crush inflation, which led to job losses and high borrowing costs. Together, these 2 downturns lasted over 22 months. In 2001, the dot-com bubble burst. Tech stocks collapsed, and the 9/11 attacks worsened the shock. The result? An 8-month recession. Then came the Great Recession, from 2007 to 2009. Triggered by the housing bubble and subprime lending, it lasted 18 months and nearly crashed the global financial system. Finally, the COVID-19 recession in 2020. It lasted only 2 months, but was the sharpest and fastest economic drop in history. The entire world shut down almost overnight. From the 1930s to today, recessions have varied in length and cause. Some lasted years, others just months. But one thing's for sure, they're part of the economic cycle. Prepare for the worst, but hope for the best. Benjamin Disraeli. Recessions can be tough, but they always pass. The key is knowing how to prepare. Here's the good news: you're not powerless. In fact, this might be the best time to build financial habits that can protect you in any economy. Here's how. Build or boost your emergency fund. Even saving a little each week adds up. Diversify your income. A side hustle or freelance gig can give you a cushion. Cut unnecessary expenses. Trim the fat and reallocate to savings or debt. Pay down high-interest debt, especially credit cards. Keep investing, but be smart. Don't panic sell. Stay long-term focused, stay informed, but not overwhelmed. Follow reliable sources, not fear. Economic slowdowns happen. They're part of the natural cycle, but this can also be a time to reassess your goals, build resilience, and find new opportunities you might have overlooked. Because after every downturn, there's always recovery. So, is a recession coming? Maybe. But the real question is, will you be ready if it does? If you found this helpful, hit that like button, subscribe for more financial wisdom, and let me know in the comments. What's one thing you're doing to prepare for uncertainty in 2025?